All right, Stephen Englander is with us. He's Global Head of G10 Forex Research and North America Macro Strategy at Standard Chartered. Stephen, good to have you with us here. Good morning. Prashant this side. The big talking point has been China. So what are we to expect, Stephen? As Alexander Redmond, as my colleague read out what he wrote in a report, he's with CLSA, that the important announcement may come from the Ministry of Finance in China. Although, I guess after the holidays, the press conference yesterday was also keenly in focus. So it may still come. Will it be a big bazooka or not? We don't know. Just your thoughts.
Yeah, we broadly agree with what Alexander was saying. We think that there will be what I'd call real fiscal stimulus in terms of trying to stimulate demand for goods and services addressed at the consumer, not at financial markets, and of a significant size. So, but not yet. We think it's going to come later in Q4. But we think that they're pretty determined to get the economy going.
Stephen, good to have you on the show today. So, the big question here in India and the kind of outflows we've seen from FPIs, the big question has been whether markets like India in the short term will lose at the expense of this big expected revival in China. What's your sense on this?
Well, I mean, in the short term, it's possible. And the move is so dramatic. You can ask how much further it has to go, and even whether it can be maintained. But you have to be impressed by the size of the move, and I think it's something that catches everyone's attention when it happens. But I think in the medium term, global equities will do, what's merited by, domestic and broad international activity, liquidity conditions. I don't think there will be long-term damage, because the, Chinese equity market has rebounded.
Hi, Stephen. Good morning and good to see you. And I wondered, what's your view with regard to the political situation here in India? There was that fear that we had Prime Minister Narendra Modi returning, but not with the majority that was anticipated. Though it seems now, the current ruling NDA is doing well in the state elections as well. How big a factor is out there? I'll tell you what, because most on the street are worried that it could lead to some populism. As of now, no big real signs of that. Your take?
I'll tell you, I am so much not an expert on Indian politics. I just will step aside from that question because I'm not going to give you an informed answer.
So we'll keep that aside then for now. But, on the broader basis between EM as well as DM, because emerging market allocation, and out of that, India will get some part of that share, right, based on our weightage. How do you, see both these two shaping up? As of now, the United States is doing well and India is doing well from the emerging markets. So your split, given the Fed rate cuts that we're going to be seeing, how would you weigh yourself between EM as well as DM?
I think India continues to look very attractive to global investors. If anything, they like more access to India. And I think that the growth story, in a way, is unique in the world in terms of the sustained growth, the positive demographics, and the way the economy is evolving. In a real sense, India is grabbing trade share from China. So I think the outlook remains very positive over the medium term, and India will get its share and maybe more of FDI.
Stephen, aside of geopolitics, which is really hard to predict, you don't know who's going to fire what missile at which nation when. So I'm not going to, try and second guess that. Aside of the situation that's playing out in the Middle East, what else could be a potential risk? Do you think we're past the whole, confusion around soft landing, hard landing? Because the last jobs report plus the rate cuts that are still expected seems to be a good going for the U.S. Would you agree?
Yeah, well, I would agree that let me put it this way. I wouldn't agree that we're past the confusion. I think the market is still confused. And, the question of, how robust U.S. growth is going to be. And even, Powell has referred to it, the pickup in US GDP and the benchmark revisions, the implications for productivity growth over the medium term, and US exceptionalism. I'd say that this US exceptionalism story was always in the background, but it wasn't like really a high probability event. But I think that, some of the evolution of the US economy, it's still not our baseline. It's not the market's baseline. But I think people are paying much closer attention to it. So that's kind of the 95 to 99 story, where state productivity growth really took off. Again, as I say, it's not our benchmark, and we would discount the NFP numbers. I mean, September is a very tricky month as far as payrolls go, and so we haven't changed from 75 basis points in Q4, even though we it looks much more likely that any 50 is in December rather than in November.
All right, Stephen, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC TV 18.